Hey, I'm Jusko, and this is Strictly Credit Cards, where we talk about strictly credit cards. Subscribe, why don't you? In this video, we're going to take a look at the Apple Card. It's been out on the market for about 2 years. We are going to see what has changed and what hasn't, what we think of the card in today's marketplace. If you find this video helpful and you're logged into your YouTube account, we just got this new thing called Super Thanks, and if you hit that thanks button down there, you can give me a couple bucks if you're so inclined, or maybe more if you're so inclined. Anyway, Apple Card has been out for about 2 years now, and they've kind of tinkered around the edges, but it hasn't changed a whole ton, unfortunately, because it is an okay card, but it is not a great card. However, for some people it is going to be attractive. Obviously, if you're a big Apple fan, you're probably going to like it. Also, if you're someone that is maybe newer to credit or maybe has a little bit lower of a credit score, Apple has some transparency around its approval process that would make you think that maybe this is a card that you could go after as well. So we'll talk about that as we go along. So Apple and their card issuing partner Goldman Sachs would like you to think of the Apple Card as your everyday credit card that you use across the board on all of your purchases. But Apple being Apple, they cannot help themselves but put roadblocks in front of you that, in my opinion, would stop you from making this card the one card that you use for everything. And I will tell you what I mean. So the Apple Card is a no annual fee MasterCard credit card that gives you rewards using the following formula. You get 3% cash back on your Apple purchases when you pay with your Apple Card. You get 3% back on purchases at a list of about a handful of retailers when you pay at those retailers using Apple Pay. So you have to use your Apple Card as the payment method in Apple Pay, the Apple Pay software on your iPhone, and then use your phone to make those payments at these retailers. And so those include Uber, Panera, T-Mobile, ExxonMobil, Nike, Walgreens, Dwayne Reed. There may be a couple others that I am forgetting in there, but there aren't that many of them. There's like 7 or 8 places where you could get 3% back when you use Apple Pay to pay at those locations. Anywhere else that you make purchases and use Apple Pay, you would get 2% cash back. So those are pretty good numbers, but it sort of assumes that we live in a world where Apple Pay is available everywhere, and that's just not the case. Apple says that 85% of merchants accept Apple Pay, and maybe if you count, a zillion online merchants, maybe that's mostly true, but I don't believe that 85% of actual physical locations are going to accept Apple Pay. And so what they've done is they're giving you that 2% on all those Apple Pay purchases and then 3% on some of those other purchases. But everywhere else, you either can't use the card because it is expected to go through your phone and use Apple Pay, or you could get the physical Apple Card, but when you actually use it, you sort of get penalized in the fact that you only get 1% cash back on all of those purchases. And Apple sort of touts the look and feel of their physical credit card, and then they sort of penalize you for using it. 1% cash back, not very competitive in today's market. So they don't want you to use that physical card. They want you to use Apple Pay. They're trying to force you into using Apple Pay if you want those greater rewards, but then they hurt you when you try to use the card at places that don't accept Apple Pay. There is not any sort of new cardholder bonus opportunity on the Apple Card. So if you're comparing this card to other cards out there on the market that do give you potentially $150 or $200 on the front end, if you spend $500 or $1,000 within those first few months of having those cards, you don't have a comparable offer here. And so that obviously is to the Apple Card's detriment. Now, like I said, Apple likes to run everything through your iPhone, so the cash back you receive on this card is going to go into your Apple Cash account in your Apple Wallet on your iPhone. From there, you can use it to either pay off part of your Apple Card balance, or you could use it for other purchases as well, but you're not going to get that cash back in your hand. It's not going to go into your bank account. Now, the way Apple gives you your money is a little different than other cards. You get it on a rolling basis. So when you make purchases, pretty much the next day, you are getting the cash back into your account, so you can see how much you are earning on an ongoing basis, and you can actually use that cash back quicker than you could with other cards where they're not going to give you the cash back until the end of a billing cycle, and oftentimes they are going to have some sort of redemption threshold that you might have to hit before you can actually get the money, oftentimes $25 with a lot of cards out there. So that's a little nicer. It's fun to see it accumulate, and it is nice that you could use it on a rolling basis whenever you wanted to instead of waiting to hit whatever that threshold is. Now, before we look at the other features of this card, let's dissect those rewards real quick and see what we think of them. 3% cash back on Apple purchases obviously is a good thing. If you buy from Apple often, well, then that's going to be attractive to you. Beyond the Apple purchases, that is a big question. How does Apple Pay fit into your lifestyle, or how does it fit into the lifestyle you are willing to have in terms of how you make payments? Do you go to a lot of places that are going to accept Apple Pay? Is this something that you see as something simple in your life? So you have those 3% categories with certain retailers, and then you have 2% everywhere else. Well, if you could get 2% or 3% on almost all of your purchases, you were always using Apple Pay almost everywhere, well, then I could see how that would be pretty attractive, because that is fairly competitive with other cards that are out there on the market. However, if you can't use Apple Pay all the time, well, then you have the physical card. You use that card, you're only going to get 1%. Again, you're sort of getting punished whenever you use the card somewhere, even if Apple Pay is not accepted. It's not your fault Apple Pay is not accepted. And the thing is, there are plenty of other 2% flat cashback cards out there on the market where you get 2% on everything that you buy, and you don't have to go through a certain pay wallet in order to do it. You just have the card and it's good everywhere that credit cards are accepted. So Apple is sort of hoping that you will buy this vision of a world where Apple Pay is everywhere, even though most of us know that it is not everywhere. So I'm not thrilled with that reward structure, but if you are someone that is very into the Apple ecosystem, I could see how potentially it is something that you would think is no big deal and you would like those rewards as they stand. So now let's look at some of the other features of the Apple Card, and then we'll also talk about the approval process, which I find pretty interesting and much more transparent than most other credit cards out there on the market. As an Apple Card holder, you not only get the cash back on all of your purchases, but for those Apple purchases, you can also get no interest financing. So if you buy an iPhone or other Apple stuff, you can choose to pay over time without any interest. So depending on what it is you are buying, you could have 6 months, 12 months, or 24 months to stretch out your payments. You would pay in equal installments over whatever that period is until you have paid off the item without paying any interest. So that is pretty nice, and you would still get the cash back on those purchases. Within the last year, Apple has introduced Apple Card Family, which is a way for you to share your card with people in your family, and also a way to potentially help them build up their credit history, build up their credit score. There are two mechanisms under the Apple Card Family program. Number one, you could have co-ownership. You could be a co-owner with somebody else on the card. You're both responsible for paying off the card, and it would get reported on both of your credit reports equally. So as long as you make your payments on time, it's going to help both of you in your credit history and your credit score. If you don't make your payments on time, it's going to hurt both of you equally. Secondarily, you could have what Apple calls participants. The rest of the credit card industry calls them authorized users. So anybody 13 or up, you could put on your Apple Card and they could use it as well. They would not be responsible for paying it back. You as an owner or a co-owner would be responsible. However, if one of the participants or more than one of the participants is 18 or above, you also could have the payment history reported on their credit report as a way to help them establish credit for the first time, and then hopefully that payment history on their credit report would allow them to get their own credit card down the road. When the Apple Card first came out, Apple really touted the privacy and security features of the card. Some of those are inherent to the iPhone, and the fact that you may have Face ID or Touch ID or that sort of thing in order to actually get into the phone. So obviously other people can't easily do that, but then some of them are more specific to the card. Things like the fact that Apple will not sell your information to any third parties like some card companies do. Also, the physical Apple Card does not have any numbers on the card. So if somebody got a hold of your card, they could not strip the numbers off and just use it somewhere online or something like that. So if you're at a restaurant or a store or whatever and they copy down all your numbers like they could with other credit cards, they can't do that with the Apple Card. It is interesting to me though that Apple Card is something that they sort of tout as one of these security features, because they talk about the Apple Card being this beautiful metal card made of titanium, and the fact that they have this security feature, no one can steal your number, but then they punish you for using the Apple Card by only giving you 1% when you use the physical card versus Apple Pay. Let's talk rates and fees. I've already said this is a no annual fee card. This card also has no foreign transaction fees. It has no late fees. In terms of interest rate, you could get a rate anywhere from 10.99% to 21.99% depending on your credit history. At least that is the range as I make this video. So if you have a better credit history, it could be closer to that 10.99%. If your credit history is not so good or you don't have much credit history, probably up closer to that 21.99%. Now let's talk about that Apple Card approval process, because I really like what Apple and their issuing partner Goldman Sachs are doing here in terms of transparency. They tell us a lot of information about how things are going to go, and they are sort of soft, I guess you might say, in terms of making sure that they aren't hurting your credit score while they do it. So Apple tells us that when you apply, they are going to look at your scores through the credit reporting agency TransUnion. The FICO credit scoring model that is going to be used is FICO 9. And if you have a score, that FICO 9 score through TransUnion of 660 or above, they say that is favorable for credit approval. So that's a lot to know. You know exactly who they're going to pull from. You know what score they're looking from. You know which score they are using, since FICO has a lot of different scores over the years. So you know all of those things. Now you might say, well, that's still not enough. I don't necessarily know if I am going to be approved or not. Well, the good thing is when you actually go and fill out the application, what they are going to do is they're going to tell you you are either approved or you are not approved. But if you are not approved, it's not going to hurt you in any way. They're going to do what is called a soft pull or a soft inquiry, which means it is not going to hurt your credit report. So if you get declined, it's not going to hurt you in any way. If you get approved, well, then when you go through and you actually say, yes, I want the card, well, then you are going to get a hard inquiry on your credit report, but that's what you wanted anyway because you were hoping to get the card. So you only get the hard inquiry if you actually get approved and you get the card. If you get declined, you don't have that. In addition, Apple has a program that they call Path to Approval, and they invite some people who are declined into this program, and it's hard to understand exactly who gets invited into the program because some people seem to, even if their credit scores are a little lower, where some people it seems like their credit scores are a little higher, maybe don't get invited in. But anyway, this Path to Approval obviously are people that are sort of on the bubble that they're declining, but they feel like maybe they could approve if they could just improve their credit history a little bit. So this Path to Approval basically is a program where they say, here are the 3 or 4 things we want to see from you over the next 6 months or whatever the period is, and if you do all these things, well, then we are going to invite you to apply again for the card, and you have to assume that your chances of being approved are pretty good at that point. So maybe they want to see 6 months more of you making payments on time with your current cards, or maybe you have too much debt for their liking, and if you can pay it down to X amount versus where it started, well, then that would be something that would allow them to approve you. So you have the option, if they invite you into this Path to Approval, to do those things, and if so, they would then tell you, why don't you reapply again, and you have to assume that you would get approved at that point. And then I also should mention here that Apple says you could get a credit line increase on your Apple Card in as little as 4 months. So some people, if they don't have much credit history, or maybe their credit history is not perfect, sometimes they'll get a new credit card, but they'll get a very measly credit line. And so then they'll feel like, well, it's great to get approved, but I can hardly use the card. So potentially within 4 months or after 4 months, you could get a credit line increase with the Apple Card. So bottom line, I don't love the Apple credit card, but if you're someone very into the Apple ecosystem or you're making a big purchase with Apple, I could see why you would get this card for the 0% financing and the 3% cash back on those Apple purchases. I don't see this as an everyday credit card for most people, even people that really like Apple. I can't imagine this would be your everyday credit card. However, if you are someone that is newer to credit, or maybe your credit score is not quite as high, Apple is being pretty transparent here in terms of the fact that you could get approved for this card if you are at that 660 credit score or above. And so there's sort of no downside if you're someone that's trying to build up a credit history to at least applying and seeing if you can get approved, assuming that you think this is a card that is, good enough for you to sort of start off with. Maybe you can't qualify for some of those 2% cards I talked about earlier, or other cards on the market that you might want. So this is a very good opportunity as a way perhaps to get a new credit card if you're new to credit or you're sort of rebuilding your credit back up again. So questions, comments, I'd love to hear those in that comment section below. Otherwise, I thank you for watching and we will talk to you again soon.